This is the Southside School of Financial Freedom Market Report and Small Account Update for the week ending September 7th, 2024. The market finished lower this week. The Dow Jones Industrial Average decreased minus 1.01% on Friday and was down minus 2.93% for the week. The S&P 500 decreased minus 1.73% on Friday and was down minus 4.25% for the week. The Nasdaq decreased minus 2.55% on Friday and was down minus 5.77% for the week. Looking at the week, we can see that there were 2 up finishes versus 10 down finishes for the major indexes. On Monday, the market was closed. On Tuesday, all the major indexes finished down. On Wednesday, the Dow Jones Industrial Average finished up, while the S&P 500 and the Nasdaq finished down. On Thursday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. And on Friday, all the major indexes finished down again. How did you do? My small account was decimated, minus 11.41% lower, but generated cash flow of 1.58%. Even when the market falls and or my account doesn't do well, I still get income or cash flow by selling covered calls and naked puts. This method does not only guarantee cash flow income, it can also beat the S&P 500. I have a watch list to determine which options or stocks that I want to sell. A stock has to meet 5 criteria to be put on my trading watch list. I will not reveal what my criteria are, but if you examine my list, you may be able to figure out the criteria for yourself. The last row is my benchmark row. That is, I measure my performance against gold, silver, and the S&P 500. Looking at my watch list from the week, the strongest performer on the list was Spider Gold shares, ticker symbol GLD. It's in the first column. It was down minus 0.74% on Friday and decreased minus 0.29% for the week. GLD is a gold ETF, a trust that holds gold bars and issues baskets of gold in exchange for deposits of gold. The objective of the fund is to reflect the performance price of gold bullion, less the trust's expenses. GLD offers investors a way to invest in gold without physically possessing and storing the gold themselves. It is a cost-effective way to invest in gold. Looking at a summary of results, you can see that GLD has increased 20.64% year to date. Please be aware that when the stock market is shaky, many investors turn to gold. Gold is outperforming the S&P 500 this year, which it rarely does. I did not generate cash flow from GLD this week. I generated cash flow from selling 3 different option contracts, 1 call and 2 puts that range from $13.34 to $29.34. And it was not until Friday when I sold a call for $16.34 and I sold 2 puts, one for $29.34 and one for $13.34. That's a total of $59.02, which is not a lot of money, but the account is small. $59.02 in cash flow was 1.58% of my account value. With this system, the cash flow money is free and clear. You can take it out of your account and spend it or leave it in to build your cash balance and or invest it. If you want to increase the amount of cash flow, you just use a larger account. For example, to 10x the cash flow to $590.20, use a larger account and instead of selling one of everything that I sold, sell 10. This strategy is guaranteed to produce cash flow immediately in every week that it is applied. However, it does not guarantee the amount of cash flow from week to week, nor the value of your account. The amount varies and the account value varies. Despite the variations in amount and value, the goal is to generate cash flow and beat the S&P 500. Most professional money managers and their strategies do not consistently beat the S&P 500 every year. They usually lose, and they lose by a lot. Last year, this method beat the S&P 500 by almost 12%, but in 2024, my account is down minus 30.62% versus 13.69% up for SPY, which is an S&P 500 ETF. That's a difference of 44.31%. So I am losing to the S&P 500 by more than 44%. It is not unusual to beat the S&P 500 one year and then lose to the index the next year. And that is exactly what I am doing in 2024. I am still trailing the S&P 500 by a lot. Does it seem like it's time to throw in the towel on the cash flow system beating the S&P 500 this year? Or will the system rebound hard for the rest of the year? Tune in next week to find out what happens. Bitcoin watch. Bitcoin fell minus 8.28% this past week, and it is down minus 26.23% from its all-time high. However, it is still up almost 30% year to date. Some people believe Bitcoin is the most transformative financial asset in 1,000 years. I think the best course of action is to dollar cost average into the S&P 500 and dollar cost average into Bitcoin at a 30 to 70% ratio for the next 10 years, and or up to when you have invested at least $10,000. I have implemented a similar strategy where I have a portfolio that is about 85% in a Bitcoin ETF. After 12 weeks, it is down minus 13.54%, while the S&P 500 is down only minus 0.45%, and the cash flow system is down minus 19.51% in those 12 weeks. What do you think? What is your strategy? Do you know how to produce cash flow every week and beat the S&P 500? Do you invest in Bitcoin, which may prove to be the smartest investment of the decade despite its volatility? As you develop, analyze, and implement your strategy, please check back to see how my small account and my Bitcoin dominant account performs against the S&P 500 from week to week by liking, sharing, and subscribing. Thank you.